Hi, Santa Barbara. My name is Daniel Zia. I'm the founder of Zia Group here at eXp Realty in the Central Coast. And I'm here as part of our commitment to be your real estate economist of choice. And I'm going to be delivering the March 2022 real estate market update for South Santa Barbara County. I'm here at my home office and I'm going to dive in. I'm going to go with the conclusion first today. So the conclusion is if you're a home seller and you want to capitalize on the historically best real estate market of all time with the lowest historic inventory levels, that time is now. There is certainty in that fact. There is a lot of uncertainty in the market. I'm going to dive into that here in the details here, mostly revolving around the interest rate, but there are a few key questions right now in people's minds. The four questions that people have right now is one, inflation. What's that doing to our real estate market? Is that going to continue to drive up and fuel prices? Real estate can often be a hedge against high inflation. Are we going to see that people take advantage of that? Number two, rising interest rates are the big concern right now. If you've been watching the news, there's predicted to be 7 interest rate hikes this year. Essentially, they're trying to hedge against that inflation, and that is causing some ripple effects. We do not know how that's going to affect the real estate market. Generally, rising interest rates create downward pressure on real estate prices, but we're in a unique market right now in that our inventory levels remain at a historically unprecedented low levels, meaning that if no new homes came on the market in just about 3 weeks, we would have no new homes to sell, which is just wild. Last year was a low inventory level year, and this year is even lower. So it's a really unique time kind of economically in that, on one hand, you have elements that are supposed to be putting downward pressure on prices. On others, you have elements that are putting should put upward pressure on prices, and we don't know what's going to win out. And then you add to that those three factors, you add a fourth factor, and that's international and political unrest and economic uncertainty, and it creates a really unique and interesting economic environment. So it's hard to predict what the market's going to do. We still seem to be seeing upward pressure prices in the short term. Part of that right now is fueled by buyers that are so desperate to get in a home today because prices have been rising so aggressively that they're being really, really aggressive in their offers today. The other factor there is with interest rates going up, if there's a 1% increase in interest rates, just a 1% increase in interest rate, that translates to what feels like a 10% increase in home price or cost to the buyer when you look at the monthly payment that buyer needs to make. That is a huge jump. So when you have rising home prices and you have rising interest rates, the buyers are getting hit from both sides right now, which means it's really a premium time to sell for if you're a seller. It's a really tough time to buy if you're a buyer. And if you're a seller, well, you might be thinking, hey, maybe I should just hold on to this home if the market's going up so quickly. Why wouldn't I wait just 6 months or another year to sell? Here's the big reason that a lot of sellers have been reaching out to us right now. They're looking at what's happening internationally. They're looking at what's happening in inflation. They're looking at what's happening with interest rates. And they're saying, hey, there's a lot of uncertainty in the 6, 12, 18-month horizon. But what we know right now is with the historically low inventory levels that you're going to have an amazing sales outcome. As an example of that, here's a good scenario. About a year and a half ago, a home in Montecito was sold for $3.3 million. And just recently, we sold that same home, again, less than a year and a half later, for $5.2 million. There were 8 offers. 6 of them were all cash. Multiple ones had released all contingency, and the final offer was $5.2 million, 10-day close, no contingencies, and that's a 57% increase in a year and less than a year and a half on that home's value. And that seller was thrilled to be able to capitalize on that and move forward with some of her other goals. So that's just a good example of what's going on right now. As far as some of the details of what we're seeing in the market right now, the $1.3 to $2 million price range is the segment of the market that I would say is seeing the most home sales combined with the highest velocity of sale, meaning that most of those price segments in the $100,000 increments, we're selling in less than 10 days, oftentimes less than 7 days. Part of that is because we've had such a backlog and such a shortage of homes in that price range. We have a backlog of buyers that have been waiting to get into that home price range. And so anything that comes on the market, they are jumping on it. And it's not uncommon to see double-digit offers specifically in that price range of homes. Switching to the luxury market, The luxury market saw 11 sales over $5 million. And the highest sale was 848 Hot Springs Road, which closed at just under $21 million. So we're still seeing good luxury sales activity. In general, your average home in the South Santa Barbara County area is taking about a month to sell. That's split up between the luxury side of the market taking about 2 months on average to sell a home, where the affordable, it's Santa Barbara, the affordable side of the market, call it under $2.5–3 million. That's taking much less, usually anywhere from a week to 3 weeks. So that's what happens when you merge all that together. It's averaging out to be a 32 days on market kind of average time, just about a month. As far as the number of sales for the year is down, and that's, in my opinion, mostly caused by the lack of inventory to sell. If we had more home sellers that were willing to let us sell their homes, we would actually see a lot more and bring those homes on the market. We've got plenty of buyers on the sidelines that would buy those homes in a heartbeat, which means we'd have sales activity dramatically rise. We just have buyers out there. There might be 10, 12 buyers for one home, and that means you're going to have 10, 11 buyers that are going to be disappointed on the sidelines at the end of the day. Only one home to sell, that large number of buyers. So when you look at what that looks like, it really feels like the number of sales is under for the year is under 2020 levels, and but it's higher than 18. I take that back. It's more like 2020. It's lower than 2021, more like 2020, and above 2018, 2019. So even though we have such low inventory, that buyer demand is pushing against that constrained inventory that's saying, okay, even if we don't have anything to sell, we'll compromise more. Just get us in a home. We're so tired of looking. We'll compromise more. Get us in a home before interest rates rise. We'll compromise more. And they're pushing through that lack of inventory and just making some really severe compromises. And that's what's needed if you're a buyer right now. You got to make severe compromises. Oftentimes, you got to release all your contingencies. You got to be able to compete with those cash offers. So you're living with a lot of uncertainty as a buyer right now, and you're absorbing a lot of risk as a buyer right now if you want to get into this market and you want to hedge against those rising interest rates in particular. So as an example, if you want to know just how few homes we have to sell, when you look at 2019, just a few years ago compared to this year, we have literally less than half the homes to sell this year so far as 2019. Less than half, which is incredible. And we're down about 29% compared to last year. So that's a little under a third decrease in the number of homes to sell. So if there were 3 homes to sell, for every 3 homes to sell last year at this time, there's only 2 homes to sell this year. And it feels like there's just as many buyers as last year. So you can you can see what that's doing just for that's one of those upward pressure price elements that we'll see how that works against some of the downward pressure price elements like those rising interest rates. Let's see, anything else here in my notes? That's kind of interesting with shortage of inventory. So again, you have 29% fewer homes that are on the market. So we have 29% fewer homes to sell. And we've only had an 18% decrease in the number of homes to sell. So that 11% spread, as a conclusionary statement, that 11% spread, what that is, that's buyer compromises. What I just mentioned is, the buyers are saying, hey, we wouldn't make that compromise last year to buy that home with one less bedroom, or to buy the fixer-upper rather than the turnkey home, or whatever or buy a property that has a lot of deferred maintenance, whatever the compromise is. They wouldn't make that last year. They're willing to make that this year. And that's that 11% spread between the fewer homes to sell, between the fewer homes to sell right now. That's what's happening, and the number of properties that are selling. So the moral of the story there would be, if you have a home that's an ugly duckling or has a little bit of proverbial hair on it right now, it's a great time to sell, probably the best time in the history of modern real estate to sell that home, because buyers are having to make harder compromises and live with more uncertainty and take on more risk and take on more repairs than they've ever had to in the history of real estate. So it's a great time to be a seller and be able to have that full leverage and take advantage of that and get a sales outcome that you might have only gotten in the last couple of years if you were a premium turnkey, beautifully remodeled product. You're kind of getting that same sales outcome now for the product that needs a lot of work. So if you want to reach out and just have a private, in-depth consultation as far as what you could get for your home in this market. Or conversely, if you are a buyer and you're frustrated that you're one of the 9, 10, 11 buyers that didn't get acceptance on their offer, and you're looking for some new strategies, some new techniques, and some way to position your offer to be like All Cash, we've got a great new cash offer program that's exclusive for our clients, where even if you don't have the cash, you can write an offer all cash without the loan and appraisal contingency. And we've got some other proprietary programs to give our buyers competitive advantage, so that more times than not, they're the one at the end of the day that's able to win that deal. So again, this is Daniel Zia. I'm signing off for Zia Group and eXp Realty for the day. Thank you for tuning in this market update, and please do reach out if there's anything we can do to help you or your friends or clients. Take care.